Knowledge is being aware of what you can do. Wisdom is knowing when not to do it. My friends, that is a great anonymous quote. I love these quotes. I don't know if I do them for you as much I do them for me. I just love them. Those that you hear that really stick with you, write them down. They're speaking to you somewhere deep. And I'm telling you, staying motivated, knowing what to do, and you know what to do because you've practiced it over and over and over, and you have learned it. You've made it part of you. Let's jump into these charts. We see stocks are up, the S&P up 2% for the day. NASDAQ 100 up 2.77%. We'll jump into those. Everything else is down. That's gold, Bitcoin, and 20-year bonds. But let's look at where we are on the S&P. Of course, we're below the 200 EMA. That means we're only looking for short trades. Why? Because the trend itself is down. Now we look at where we are on the weekly. We can see the weekly is still negative. We've not hit the lows that we hit in that week beginning on the 9th of May. But again, we still are red down candles and a red STC. We look at the 2-day. We have a green 2-day candle there that has formed. But the problem, of course, with it is the STC is still negative. Now, we look at the 195-minute chart, the half-day chart. We can see where we had that attempt to move down. We tried to jump in early and catch it. We caught about 4% of it before it bounded back up on us. We pulled it without a loss. Of course, if you'd had like a trailing stop, you could have tried to set that. Some of you guys were asking me about how do I set trailing stops and what do I use as the trailing stop? Well, my friends, again, I've not been into those a lot, but in crazy markets where things are like this time of year, a trailing stop can be something for you to look at. And of course, you've got a great figure here with the ATR. Start with the average true range. That's $8.60. So that is what the average true range is. If you're looking at setting a potential trailing stop, you could at least start looking at that number on your practice trade. So think about it. Again, that is, I could teach for 2 hours on just that alone, but I'll just pitch that out there to you as a little suggestion. What I really wanted to show you too is look where we are. If you follow the horizontal line here, you can see that we bumped up about where we are right now before, and then of course rolled over. Now that is on the half-day chart. Does that mean we're going to stop? Well, we're going to pay attention to that and see how much further we go. Of course, we're anticipating at any point the potential for a rollover. Why? Because we're at a negative 14 right now. We have a negative STC on the 2-day and on the weekly, so the pressure is down. Doesn't mean that we could have hit an interim bottom and now we're moving up. You can see where we hit around the same spot, somewhere around the 385 mark or something. Tried that a couple of times, could be moving up, but it could also be range bound, hit here and move back down at the 408 mark. Don't know. We do know though that the big charts are still negative. So that's what we're looking for. And we're below the 200 EMA. So we're waiting for red candles to start forming. And of course, what we would look for first and foremost would be we would look for a nice crossover. We want to see a nice red down candle with just a wick on the bottom, no wick on top. We want to see that STC rotate over, go from green to red on the candles, and immediately green to red on the STC. That's what we like to see, and then capture that move. In fact, that move was a whole lot more than we captured. If you had a trailing stop there, you might have done considerably better than we did, capturing just a measly 2-to-1 risk to reward ratio of 3.24%. Again, I say that facetiously. Of course, what did we capture on the next move? Of course, we captured a 5.06%. And then, of course, we stopped ourselves out when we hit that line. And of course, we got out of the other trade without a loss. So what are we up? Well, up 2-point something there, 5-point something there. It's not bad. Not bad for, a month and a half, not even that, maybe just a month. Yeah, just a month. So that's not bad. Not bad at all. So again, whatever kind of bite you're able to get out of the apple, it adds up, my friends, as long as you minimize those losses. That's where we are on the STC. Let's go to the NASDAQ 100. It was up a little more, 2.77%. And of course, is it going to bound up here and then move back over? We don't know. We'll just keep an eye on things and see where they are going. Of course, we can move things down. Made a little bit till things flipped over on us if you stayed in. Now, of course, two schools of thought there, hopping out when things first rotated over and went to green, or staying in until the STC went to green, as long as you weren't taking any losses, and you would have stopped out at about the same point. So it at a 0.5% or something like that. But again, we had a nice sweet trade, a 7% there back in early May, and a 0.5% here. Again, all of it adds up. Didn't lose anything, didn't give back to the market, so that's good. Don't expect all the trades to work. As your learner always succeeding formula, whatever the name of that training is. In fact, I'll put it at the end of today's video so you can take it. We really concentrate on the math there. 2-to-1 risk to reward ratio. You win 4 out of 10 times, and that is a pitiful record. But if you do that, you're winning. And you do better than that, and you are really winning. And that is with a 2-to-1 risk to reward ratio. That's losing 6 times and winning only 4 times. And again, losing fully. Now, the trades that we've been looking at that I pointed out to on the S&P and the NASDAQ, no losses at all. That's not always going to be that way. You're going to take some losses. That's okay. Minimize those. Obey those profit bands, and again, pull those trades when they're not working. Sometimes that doesn't happen. Sometimes they just turn around and hammer you, and that's okay. You take that loss, you get out, you move on, you do things the right way, and if you do things the right way, you will have a loss every now and then, but over and over and over again, you're going to see, and you have to prove it to yourself. You have to do it. You can't just rely on what I tell you. You've got to get out there and practice it. So we see things moving up, these candles moving up. We're just waiting to see. Hopefully we'll have a red crossover going down. We'll be able to short the NASDAQ 100 with something like PSQ, or you can get into a put. And again, great training for you if you're a Patreon member. 3-part series, options made simple, the charting wealth way. Let's keep moving. Going to move out of stocks into bonds. Where are we there? Well, we are still, now when we look at bonds, the 2-day, I'll point out to you, it is green. We've seen where things have bottomed out in bonds and moving up, 4 up candles now. The weekly still down, but going into the second up candle after a big spinning top, which is lots of indecision, but tending up. So we're at, again, as far as negative goes, we're just at -10 right now. What are we waiting for? We're really waiting for bonds to sort themselves out. I have to pull things way down. You can see we do have a 200 EMA. We're below it, so we're looking for a short trade if it offers itself up to us. And again, we'll be careful with it. Do we have perfect candles right now? No. Little wicks on top, nice wicks on the bottom. Of course, what we prefer are strong red down candles that allow us a good jumping in point. And again, we'll pay close attention and see how things set up as we move forward. Maybe we'll see things rotate over tomorrow, maybe give us an opportunity to jump into something. We just don't know yet. We shall wait and see how things go. Now, and keep in mind that the 2-day is going up. The weekly candles have some up movement. The weekly STC is still down. So we've got a lot in flux there. That's why I'd be very careful on your down moves. And we're not in up moves yet because we're below the 200 EMA. Okay, let's move away from bonds. We shall go to gold. Gold down a little bit for the day, 0.18%. And of course, we saw where gold, we're getting excited, it's going to cross over the 200 EMA and allow us to jump in at some point. Well, it's pulling back right now, and we'll just wait and see how things shake out. We look at the 2-day on gold. Of course, it's still negative, although we had 4 days of up movement and sort of burning some of that off right now with that green spinning top. STC still negative, and on the weekly, of course, we had those weeks of down movement. Gold tried to bottom here, and of course trying to move up, but very sickly up movement for the week after sort of dying underneath that 200 EMA. So we'll keep our eye on things, and if gold really heats up with that down movement, it'll sort of depress me, but we'll watch, wait and see where things are going in gold. Now, we'll move on into Bitcoin. I will be releasing this week's Charting Crypto to all of our non-Patreon members tomorrow afternoon, as I typically do on Fridays. But where are we on crypto? Well, we can see on Bitcoin, and again, Bitcoin leads the way. It's by far, as you guys know, the largest cryptocurrency out there, and it is the tide flowing into or out of the harbor. It is what floats the other boats in a large measure. What do we see going on here, though? Lots of just sideways sliding movement. That's why the STC's sort of gone wacko. You got to have ranging movement to have something like the STC, the PPO, and the MACD to be able to give you much of anything. What we have here is hopefully a bottom. It could just be the digestion of the down moves to get ready to pound down again. Don't know, but we're waiting, watching, trying to see what's going on. That's on the half day. When you check out what's up with the 2-day, again, you can see where things pounded down. And again, they've not reached the low that we hit with Bitcoin back on the 2-day candle on the 12th of May. But they are slowly sort of deteriorating on that 2-day. We look at the weekly, and again, we can see where things pounded down that week beginning the 9th of May, and we haven't reached that low again yet, although this week is lower than last week. So we don't know what's up with Bitcoin. Maybe it's reached a bottom. Maybe it's just digesting those losses, and it'll hammer down again. Whichever way it goes, we'll be ready. We'll keep the powder dry, and we shall be here. Folks, that's where we are. I appreciate you being with us. Of course, we're going to give you tomorrow at the close of the markets, we're going to do a great weekend review for you. Remember, here in the States, Monday is Memorial Day. It's Memorial Day weekend here. So we will do our show for Tuesday tomorrow to get you through. That's our weekly review and forecast. We'll talk about all these things, take a weekly view of where we are, and help you get ready for that shortened 4-day trading week here in the U.S. Thanks again, my friends. God bless. All the best from the whole team at Charting Wealth World Headquarters.